Good morning, everybody. It is the 9th of March. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Morning, Steve.
Morning, mate. You right?
Yeah, all good, thank you. You?
Yes, very well, thank you.
Liverpool scraped through to the next round of the
They
Champions
did.
League.
I mean, they sort of dominated the game, but if they hit the post,
Three
crossbar,
times.
they had, yeah, and they had sort of like a fantastic goal line clearance by, is it Vidal?
Is he still knocking around? Is he? Arturo
Yeah,
Vidal.
he's still knocking about. He's still running around like an absolute lunatic.
Yeah.
But yeah, they blew it. Sanchez got sent off after straight after they scored for a second yellow card, and that
Alexis
was it.
Sanchez.
Yeah,
Oh,
so he blew it basically for them because obviously there would be a little bit of nerves creeping in, although they didn't really sort of produce anything for most of the night. It was a humdinger of a goal though. He absolutely smashed it.
I haven't seen it actually. I'll check
Yeah,
that in a little
oh,
while.
incredible goal. But yeah, it's yeah. I mean, they were quite comfortable even after. But I mean, Sanchez getting sent off made it a lot more comfortable.
Yeah, cool. Okay, let's move on then to the latest headlines. Aside from football, obviously the Ukraine situation remains front and centre. The humanitarian effort is dominating the news at the minute. Ukraine has begun efforts to allow safe passage of civilians attempting to flee from cities surrounded and under heavy shelling from Russian forces. The latest military assessment suggests that Russian forces have made little headway, which is pretty good. As far as the West's response is concerned, there is further evidence that the US, in particular, is very anxious to avoid escalation, with reservations over plans to provide Russian-built fighters based in Poland to Ukraine. There have, however, been further efforts to isolate Russia in the global economy, with a large number of companies suspending operations in the country. Obviously, this is going to have global implications, and that was also in focus yesterday. Given the efforts to isolate Russia economically and financially has been a major focus, there is important global geopolitical and economic implications, especially if there is a prolonged conflict. The US administration has had little success in persuading Saudi Arabia to increase crude production, with Saudi Arabia exerting leverage over Yemen. The surge in energy and commodity prices has also increased the global stagflation fears, with further up pressures on inflation, while growth forecasts have been lowered. Markets under pressure yesterday, although we did see the US markets attempt to rally at times throughout the session yesterday. The S&P declined 0.7% on the session to close at its lowest level for 8 months. Oil prices remained at 13-year highs, and nickel trading was suspended after another huge spike in prices. Gold closed at record highs, or was very close to record highs, sorry. There was strong demand for the precious metal yesterday, with risk aversion combining with stagflation fears. Gold moved well above $2,000 per ounce and was close to its record highs posted in August 2020 at 2,070. That's pretty much it on the headlines. So, Steve, let's get stuck into some charts. What's catching your eye this morning?
Well, I suppose we could start with gold and highlighting the chart here. We can see how close we are to the all-time highs. I should really tidy up this. It's a little bit messy, this chart, but I'll do that later. Yeah, just shows you how far away we are. Here's the August high, the week, well, the actual day, 7th of August. And yeah, we're not far off there. So we've had a little bit of a pullback this morning, but only small, only $30 away from the all-time highs. We have a double bottom formation that we are looking at. The measured move target is above the all-time highs, 2,156. This is from the lows of 8th of March week and the 9th of August week. And here's the neckline, break of the neckline, and playing out really, really nicely. Can't really moan about that. Although I suppose you could say the 21st of February week, we did have a little bit of a head fake there, had the push through, it closed lower, and then the following week it kicked on. So yeah, plenty of potential on the upside for gold. If we want to drill down to maybe shorter time frames to get a few levels to, want to join this this gold rally, really we're looking at 2020. We should see some support around there, and below there at 2,000, obviously a big psychological figure, but also a level where we stalled at. And then once we broke through, we found support at. So $2,000 an ounce looks to be a nice little place to join the party if we do get a pullback to there. On the crude oil side of things, again, we're looking at recent highs, obviously yearly highs. If we go back to the weekly chart, we broke through the resistance from 2011, that May 2011 week, and obviously all-time highs up at around about $150 a barrel. Still a way to go before we get there. The weekly candle doesn't look hugely impressive at the moment. It looks like a bit of a hanging man candle. So potentially a sign of stalling where price action has pushed higher and is closing. It's still closing higher, but it's sort of like the body of the candle is at the top of the range. That can be a sign of potential for a pullback as well. However, still a lot to the week to go. We've got oil inventories out this afternoon, so we expect to see some volatility creep in there, and a couple of days to go before the end of the week, and we really get some significant candle there. But at the moment, although it's higher, it's not looking massively impressive in my eyes. Again, let's try and find some levels to look at. Really, we had this $115 level, which formed a high in March. Well, this is 3rd of March. This is on the hourly chart, and we got up again here on the 4th of March, and then we had this big gap open, obviously at the start of the week. We had the pullback, filled the gap, which we talked about, and it's pushed on from there. So $115 in WTI crude oil looks to be at quite a decent level. On the Brent side of things, 118.35 is a similar type of level where it's come down, filled the gap, and then kicked on. So still potential for further upside. Although, the Russia-Ukraine situation could, if there's any sort of like sign of tension relaxing somewhat or slowing down, then we could have quite an aggressive pullback as well. Looking at cryptocurrencies, Bitcoin had a really good rally overnight. So we had resistance at 39,700. This is the hourly chart. We had this inverse head and shoulders formed. Let's draw it for you. So the sell-off right down here, we can say the left shoulder was here. Here's the neckline. Here's the head. Here's the right shoulder, the dip down, and the rally higher. So that's looking pretty decent. Measured move target for this, all we do is take the length between the head and the neckline, and we've hit the measured move target. So that was a really nice thing to play out if anyone was looking closely at the technical picture on the hourly chart on Bitcoin. Let's consider the larger levels here. We've got this found support at previous support levels, 37,000, and the reaction high has been pretty impressive, but we expect to find further resistance between 44.5 and 46,000. So that's the levels to watch really in Bitcoin today. Taking a look at indices, we've seen this recovery continue in FTSE. Again, quite a lot of lines on here. Let me just clean the chart up a bit so we can really take a look at the sort of price action over the last few days. We had this indecisive candle on Monday. We had the rally on Tuesday, and this rally has continued into today. We've taken out yesterday's high, just pulled back from there ever so slightly, but looking pretty positive overall. We should find some sort of resistance, probably up around about the 7,200 odd levels. The volatility is expected to continue. Obviously, FTSE is it has components within it which are doing extremely well, especially if they're dollar-based or a commodity type of sector. They'll be benefiting from the spike in the oil prices. So that should continue. On the, I was a little bit unlucky with this, the DAX trade. Well, saying unlucky, it still had a swing lower of about 300 points, so not really unlucky. But I captured the idea behind it was for an expectation of this market to rally. It did so, pull back towards a close, but today we've marched on and looking very strong as we go into the open on DAX. 13,338 or 13,340 trading now. And next real resistance coming in around about the 13,700 up to 800 level. So room for further upside there. And if we look at maybe the 4-hour chart, we can see we've got this double bottom formation, which we're closing above that neckline at 13,150. And that should project a measured move target around about, just do an estimated measured move target around about the 13,900 level. So good potential on the DAX side of things as well. So maybe we could see some respite from the aggressive sell-offs that we've been having in the indices. Looking at the daily chart, also on the Dow, this inverted hammer yesterday. So this looks like a decent reversal setting up as well. We stalled in front of the previous swing low at 32,230. Actually got down to 32,343, and then rallied back. And overnight, we've projected higher again, completely engulfing yesterday's losses, and obviously taking out Monday's low close as well. So fighting back on the Dow side of things. Nasdaq, same formation. This morning doji star formation would be confirmed with a positive close today, and the S&Ps, yeah, exactly the same. So we've had it looks a little bit more positive on the indices side of things, Joe, and yeah, that's probably about it from my side of things. How's the currencies doing?
Yeah, not too bad. So let's just start off with the dollar index. Just clear that off. So yeah, it's still trading in this bullish channel, as you can see. We recovered from the intraday sort of selling that we saw. We got down to 98.72 yesterday at the lows, but managed to fight back into the close with that to still sort of hug the top end of this bullish channel. We are seeing a bit of a reversal today, so there seems to be a bit more funds or investors sort of position themselves back into riskier assets, as we've just seen with the indices that you've just shown us. So maybe a little bit of a turnaround taking place today. So that's looking a little negative for the dollar index, but overall still remains pretty positive. If we look at euro US dollar, that has found some support down here at 108.30, which is an 88.6% fib level. Sort of not often used really, but one that I think it seems to have done a pretty good job in this instance. So I've seen a bit of a bounce back. We've got some resistance up here now to target at 1.1000. And if we look at cable, that broke down, as we spoke about yesterday, through support at 131.60. And now we are maybe in the process of seeing a retest of the underside of this. And that's quite a common theme across a number of currencies, actually, particularly in some of the euro-based ones, where we saw some really big breakdowns last week. So this is Eurocad. We sliced through this support level at 141.00. We made lows all the way down here at 137.68. We've seen a pretty impressive recovery, but as you can see there, yesterday we ran straight into that level on the first attempt at of resistance, and it did a pretty good job. So while that continues to hold back the upside, there is potential for fresh short positions maybe to be put in on this particular market. It's a similar situation with others. This is Euro Yen. So we've seen a breakdown from the range here that this has been trading in for a while. Maybe looking for a retest of the reverse side of this now, which we should see act as resistance at 127.38. Euro sterling, that's had a decent bounce actually from the support level here. Obviously a big overshoot to the downside, but it's back above this 82.84 level and looks to be on the front foot today. So seeing a bit of money come back into the euro markets, which is not a surprise given how much they've been beaten up in recent sessions. One of the worst was the Aussie dollar and the euro, which had, I think, 13 consecutive down days. We saw a really big reversal take shape on the 7th. That was backed up with further gains yesterday, but we are pretty flat as things stand at the minute. So I think really it's just a case of these maybe seeing some short covering. But I think we all see these trends go again on the downside. So do be careful if you're trading this corrective phase in some of these euro pairs at the moment. I think that's pretty much it. Yep,
Nice
that'll
one, mate.
do. Okay, so gun to the head trades from yesterday. Steve, you touched upon a moment ago that you looked at DAX and it was quite tight with your stops. So unfortunately that was stopped out. We got a win of 0.72R on copper yesterday. So that was quite a nice win. So from a net perspective, we didn't do too badly yesterday. Let's see if I can bring up this copper trade. Yeah, so that was the trade yesterday.
Nice.
Got off to a pretty decent start, but yeah, still nicely onside at the close. What are you fancying today, Steve? I've got one ready if you want me to go first.
Yeah, go ahead, mate.
I'm looking at Bitcoin. So it's up, well, a moment ago, it was up 8.8%. I was just looking at it from the intraday perspective. So this is the hourly chart, and just using the fib levels really. So this high that we posted on the 2nd of March, down to these lows that we posted on the 7th, the 61.8% fib comes in at 42,270. So it looks as though that's done a reasonable job as resistance. So I did want to sell it a bit higher, but I've missed that. So I'm going to have to go now at 41,972. And I'm going to go with a stop loss at 42,845. Targeting a move back down to these swing lows at 37,170. So looking for 5.5R on that one today.
Nice
Give
one.
me enough time, Steve?
Yeah, probably. I'm a little bit undecided, really. Looking for some value, maybe potentially looking to fade this gold. We've seen a little bit of negativity over the last few hours. So potential. I mean, it's an overextended, overbought to the upside. Potential for a small correction lower, possibly. Getting short here at 2032. Targeting a move really only back to around about the 2000 level. Let's make it 2002, and I'll have a good year. I'll have a stop of $10 on that, which is really at the high, just above the current high of this hourly chart. So short-term risk reward 3-1, quite nice risk reward. Yeah, looking at just a correction back down towards the 2000 psychological level in gold. Yeah, that's it.
Good luck. Okay, data-wise today, Steve mentioned earlier that we've got the crude inventory numbers out, and that is at 3:30 UK time. We also have some jobs data from the States at 3 o'clock, which is the US JOLTS job openings. Not really something that's going to be particularly market moving, I don't think. The key events that we're looking for this week start tomorrow with the ECB policy meeting. And also we've got consumer prices from the US tomorrow as well. So a couple of bits to keep us interested today. I think that's pretty much it, Steve.
Yeah, nice one. I did see that the LME cancelled the nickel trades that we saw.
Okay.
The rally to $100,000, the spike higher. They've cancelled a load of trades. Obviously worked out that if them trades were to go through, there'd be absolute ruin within the LME market. So they've managed to modify the sort of like the trades that took place at them levels and saved someone's bacon.
Yeah, looks like it, doesn't it? Okay,
Yeah.
cool.
Don't like it when people manipulate markets like that so openly.
Yeah.
But that's the way it goes.
Yeah. Okay. So if someone, so they're cancelling trades even if they're profitable or at a loss.
Yeah. I think they cancelled trades from 12:30. I don't know if it's 12:30 PM, AM, whatever on that day where the trades sort of like spiked higher, they'll cancel all trades after 12:30 for a period of time when the market settle back down again.
So there would be some people that absolutely had it off on that move, but they're now not allowed to keep those profits. Is that what you're saying?
Yeah, absolutely. Yeah.
Ouch.
Maybe it's a good thing. Keep orderly markets, but you know what?
Well, if that's what you planned for, though, and you saw the thinness in the market, and that's what you went for, you'd be gutted, wouldn't you?
Yeah, you would be absolutely devastated. I've seen it happen before on sort of like similar occasions. Obviously, when the Swiss market removed the peg back then, there's a lot of brokers did exactly the same thing, cancelled trades after a certain time, and then matched all trades at like lesser levels. Or yeah, not ideal, but maybe it's the right thing to do. Just feels a little bit wrong.
Indeed. Okay, cool. Well, we'll be back tomorrow morning. So have a great day, everybody, and trade safe.
Cheers. Take care.
Bye.